Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. I hope everyone had a relaxing weekend, spent some time away from the charts that we will no doubt be referring to a lot this week. This is the end of the quarter. It's a very tricky week because we have a different kind of psychology going on end of quarter. There's a sort of finality, at least to the quarter, that comes in as people are trying to jockey around for position to set themselves up for the next quarter, to figure out what kind of position they want to show. Now, imagine if you're being graded on the positions you're holding after the end of this month. So imagine that you're managing money, statements are going out, people are going to check how they did this first quarter of 2023, and what you hold and what you don't hold, you're going to be graded upon. I mean, this is basic psychology. We don't have to get all fancy about sector rotation and asset allocation here. People just want to know they're positioned in a way that reflects what they think about the market. What right now do they think? That we're having bank failures, the market's under an extreme amount of stress, that tech is a relative outperformer, these kinds of things. And with that, we have folks having to answer for what they own. I've noticed through the decades that strength tends to get stronger and weakness tends to get weaker in this part of sort of this cycle, the end of quarter cycle. So kind of like end of year, but not quite so intense. All right, so with that being said, that's what we've got going on today. What do we have today by way of hot zones? We have Dallas Fed manufacturing, which normally I don't really care much about. But since there's very little else to react to at 10:30, it's going to be in play. One thing to note is the 2-year note. That auction's going off at 1 o'clock. Usually it's 1:01, something like that. If you haven't checked out why I'm watching the 2-year note, check out the This Week in the Market. It's in the archive section, the March 24 issue, my Sector Secrets Mastery folks. This particular issue is in the room drives. If you log in to the trading room, you will see the current issue in the room drive. All right, so if we know that there is three major hot zones today, Dallas Fed, 2-year note auction, and then the Jefferson speech. Jefferson's not going to affect our trading session here in the US. If you are an Asian session trader, or if, who knows what's going to be said, if it does have reverberations that will carry through European Open, UK Open, Asian Open, and close, we might deal with it tomorrow around 7 a.m. So let's see what happens, but not going to affect our day today necessarily. All right, gang. So that is a quick look at what's going on a little bit more broadly. Let's jump on into the charts, take a quick market pulse. I've got the 5-minute chart there on the left. I've got a 1 hour here in the center, and the daily time frame all the way to the right. And what we're looking at is what's the structure that we're inheriting for the open? Are we up, down, sideways? How do we assess the market trend? Gang, there's a really easy way to do it. It's using that multi-chart there, or multi-trend down there at the bottom. We're looking at multiple trends, right? We're looking at multiple trends. It could be neutral. It could be down. So this is neutral, that lower row. That's a downtrend on the 5-minute. Here's a brief period of an uptrend from here to here. The multi-trend helps decode not just the trend, but frankly, the momentum as well. The top row is momentum. The bottom row is the trend. And that's the absolute easiest way to get a feel for the path of least resistance, quite frankly. And even more so, the clarity of when we don't have necessarily a trend, and that's that neutral or yellow. So I'm not inheriting a trend on the open in the S&P. What about the next of our market pulse? And if you haven't checked out the Friday free video at the Simpler Trading YouTube channel, I went through how I use these three symbols to be able to take the pulse of the market at any time of day, quite frankly. So the next is a euro. If the euro is up, if the euro is recovering from Friday's weakness, that is a weaker US dollar. All right, so we are seeing a little bit of strength in the euro, at least up off the lows, and certainly up off the close. That's significant. That would be on the bullish side of opinion. The last one, the bond market. All right, so what do we have in bonds today? Bonds are heading lower. And you might say, gosh, Rog, yields are heading higher when bonds head lower. Why are the equity markets doing pretty well? There's two places we might see an unwind if there's a little bit of a sigh of relief. One is bonds. Bonds may not be sold because necessarily, in this case, moving lower, higher yields. Bonds may not necessarily be sold because we're not scared. I mean, look, if I'm looking at lower yields, stocks like lower yields, right? And we saw the flight to safety in bonds. So a little bit of that unwind, if you think about it, right? If we bought bonds because we were freaking out for a brief period of time, wouldn't it be maybe a little bit of a sigh of relief if that unwinds a little bit? We will be looking for potential buys on bonds as it heads down into the daily price movement range. Okay, so definitely keep an eye on that. And then lastly, got a few questions about Raghee. You still day trading? Oh gosh, of course. The first hour of every morning, I am still looking at the 5-minute charts for day trading. And that means I'm looking at things like the wave and the market structure. Take a look at the ZB, downtrending intraday market structure. What does that mean? I'm going to use these nice red resistance zones to help set up shorts. So if you're looking for automated zones based on not something you don't know, that's why I love to give everyone transparency of what's on my chart. If you want to measure volatility, what are volatility-based support and resistance? Not more price-based levels, not more moving averages. I've got all that, right? Darvis takes care of price. I've got the wave that's moving averages. I've got the multi-trend that's moving averages. But how do I find levels that are based on historical volatility? That is the HPMR. And that's my absolutely number one preferred day trading tool for support and resistance. It's very effective. So that's what you see there. All right, let's get to the questions. So first up, MVC Chief asks, can I, in a nutshell, explain the correlation between ZB and GC? I recently noticed they tend to track together. Yes, so that's something we talk quite a bit about. Right, so thank you for the question. We talked quite a bit about that in the mastery. And yes, so what is the correlation? Why do they seem to move the way they do? Because if you think about gold, which is not a flight to safety commodity, it is a commodity that moves inverse to real yields. Real yields, and here's the connection, MVC, here's the connection. Real yields is the nominal rate of a bond minus the rate of inflation. So if part of that calculation is bonds, and gold is not a flight to safety, but does move based on real yields or real interest rates, that's where the connection is. That's where the connection is. And ideally, if I'm going to day trade them, if I'm going to swing trade them, if I'm going to trade even longer term, I like to see real yields contracting, and that gives gold the green light to move higher. Now, are real yields contracting today? They're actually not. So if you're wondering, why is gold down today? Well, if yields are moving higher, the actual percentage of what a long bond is yielding is actually moving higher, which is what you see when the futures, ZB, or the TLT ETF are moving lower. Remember, the yield and the direction of those charts are inverse, they're opposite. So if real yields are actually moving higher, wouldn't that go to say that the nominal yield of a bond is yielding a higher amount and inflation's pretty much where it is? So that chasm just got wider. That sends gold lower. So that chasm narrows, gold moves higher. When that chasm widens, gold moves lower. Why did gold move higher? Well, we saw quite a few days of bond yields moving significantly lower, right? So that's a narrow real yield, and therefore gold move higher. So just kind of remember that expansion, that contraction, how it moves gold. And yes, they do tend to move together. So great observation. All right, next up, Stephen, looking to short CMA and KRE on the daily and hourly. Okay, let's do that. Let's pull up KRE since a lot of us are looking at that pretty darn closely. And you mentioned the daily and the hourly. Sure. Daily, I'm with you. And let's start with the bottom of the screen. That's the multi. So if you've ever wondered, okay, how do I know whether or not a chart that I'm trading is in a downtrend, a neutral trend, or an uptrend? Look no further than the multi, gang. It just works. And so here, and by the way, these are moving averages. So while I could have all sorts of moving averages and secret squiggles, why not just have something that's traffic light simple, right? So that's red. So I'm with you on the daily, Stephen. But what about the hourly? So on the hourly, I would have to wait for some kind of resistance, preferably an overbought slow stochastic. Notice the slow stochastic, it's up near the high, right? It's up near the high. The next release, by the way, of the DPMRs and the HPMRs, which are coming out today, and I won't update them on my chart till you all get the notice that they're updated, but they have been sent to the office, and you should get the notice today. I'll update them then as well. But right now, you'll notice it's neutral, and then the new release will have KRE and a number of new symbols on both the DPMR and the HPMR tool. So do I like that short? Yeah, I mean, we could use the Darvis in the meanwhile. For sure, this is resistance, overbought, right? Neutral, where any kind of overbought, oversold tool is helpful. We can keep an eye on that, sure. If not, I would say daily needs a significant bounce higher before I can short it, right? So I'll be keeping an eye on that. And First Citizen Bank has apparently bought most of Silicon Valley Bank, and that's relative to our conversation here because this is the regional bank ETF. All right, thank you, Stephen. Hey there, editor, do I think it may be an opportunity to pick up some bank stocks soon, like Wells and Citi for the long side? Oh, so longer term. So longer term to me is going to typically take me to a different time frame, and that's going to be the weekly. So is there some justification for some weekly potential support in terms of, let's start with Wells. So here's Wells, nice Darvis support, nearly oversold. So I'd say Wells is looking close on the weekly. The other symbol you said was Citi? Sure. Let's pull up Citi. Citi's not quite as ripe, if you will. Here's my Darvis 2.0. So that's Darvis 2.0, which, by the way, gang, is different than traditional Darvis or the Darvis that you will find built into the Thinkorswim platform. They are not the same thing. So closer to 40, perhaps. And I'd like to see an oversold stochastic. We must remain neutral. Editor, we must remain neutral on this weekly time frame for that to be valid. Now, there are some things I don't like about both. Notice that Citi is below those white dots. Notice that Wells has dove below the white dots. It doesn't make it unbuyable. It just means we're in the bearish hemisphere on the weekly time frame of those two stocks. I prefer, if I'm going to buy something for a longer term hold, I prefer that they be above the 200 on the weekly. It's not a make it or break it decision, but it is something that I prefer to see because ultimately it gives me an idea that when other traders, because remember, we're never in a winning trade by ourselves. We're never alone in a trade because not only do we need to see what we see, other people need to see things, and then we all move the market together, right? You can't be alone in a winning trade. We're never the only ones. So when I think about it that way, when I see a stock on the daily, on the weekly, on the 1 hour, on the 5 minute is below those series of white dots, that's at 200 exponential propulsion. When we are below that, it's in the bearish hemisphere. And when we're above that, it's in the bullish hemisphere. And think about scanning. Most traders, I'd say most, use some sort of technical criteria to put together a watch list. That's not what I do necessarily, but we all to some degree group things together or place an opinion on a symbol based upon a series of technical criteria, right? So if I know that a stock or an ETF or a futures contract is below the 200, it's going to land sort of on the bearish opinion of those scanners. And when it's above that level, it's going to land on the more bullish opinion of those scanners. That's something to keep in mind. All right. Next up, Mr. Walker asks, said B, sure. And GC should move together. Yes, ideally, yes. ZB and GC should move together. You got it. You got it. Hey there, Stacy. Thanks as always. Thanks as always. All right. Let's see what else we have here. Can I show the relationship between price and real yields on the note? Still a bit confused relative to FOMC and stock market safety versus risk. Well, I look at ZB. If you want to look up real yields, the way that I would recommend doing that, here, let's go to the websites here. If you Google real yields, there's a number of sites that come up. The one that I like is at a site called longtermtrends.net. In fact, I put this chart in this week's newsletter. All right. So what I'd like to do, and the only reason I went, you kind of can't see that. Here, let me see here. Is that a little bit better? No. All right. You kind of can't see their nominal interest rate. That's the black one. So anyway, I did put this graph on the newsletter this week. And so that's how that works. The red line is your inflation rate. All right. The black line is your nominal interest rate, yield of a bond, long bond. And then the blue is your real interest rate. And if you're ever curious, right, this is the 1-year treasury they're tracking here. If you want to track real interest rates, there's your 1-year treasury bond, inflation rate, real interest rate. So check that out, Tim. It'll explain what it is. I'll look at the nominal yield of a bond against ZTs, ZN, and ZB, the 2-year, the 10-year, and the 30. When you pull those up, you'll see the yield is a little bit different, but this particular site does it with the 1 year. So if you want to check that out, so that's all you're looking for. You're looking at this blue line, if it's moving higher or if it's moving lower. As far as confused FOMC, nope, that's not what I'm using it for at all, my friend. It's just a way to understand what's happening with gold. That's it. That's it. So I don't look at gold as a flight to safety. I'm just trying to look at the bond rate and the interest rate in a way that it gives me a better picture of what gold is most likely to do. And that's really it. I'm not making any more broader an opinion of the market based on that. Speaking of the market, let's again go take a look. I want to show you all the. Here we go. Trading view. So again, when I'm thinking about the market, I'm thinking about how do I take the pulse of multiple symbols. We really need to remember in CHOP, it's going to be a stock picker's market. In other words, we have to find relative performers. When we have a trend, it's easy to play the tide. It's easy to play the larger groups, indices, sectors, but we don't really have that right now. Although, if we looked at ES and we looked at 6E, but what about NQ? Is there more of a rising tide there? And we absolutely do see the beginning of the NASDAQ starting to trend a little bit higher. And we can see that XLK, the most important sector in all markets, because it's weighted in the NASDAQ, it's weighted in the S&P, it's weighted in the Dow, also heading higher. So if we think about strength getting stronger, weakness getting weaker at the end of the quarter, we've got a pretty good idea of what's going to take it on the chin. Probably financials, probably healthcare, probably regional banks. What's going to benefit? Keep an eye on tech, gang. All right, so that's a wrap for me. We're here every Monday through Friday from 9 to 9:20 for Charts and Coffee. I'll see you tomorrow, same time, Same station, gang. Be good to each other.